Good afternoon, everyone. So, I'm blessed to have such a distinguished panel. Today, we're going to learn how to make hotels good to great. Before we start, I wanted to share a few thoughts about formal organized asset management. It's fairly nascent in our country, only in last decade, since we started to see some institutional capital, multi-hotel ownerships. Formal asset management has started to take traction in our country. The leading example of asset management globally is host hotels, and I thought I'll start the session with sharing some data points from the most recent annual report. Host Hotels pride itself for having 114 hotels. It's self-managed, self-regulated REIT. It has 60,000 keys. It has various brands working for it. It delivered $630 million to its shareholders in last year. Its enterprise value is $18.3 billion. What makes Host Hotels so great? They perform better than peers. They leverage their scale. They take their hotels to greater heights just by that sheer scale. They expanded their margin by proprietary data analytics tools they deploy in their running of business. They have people, data scientists working for them. They do timely disposing of asset. So they don't only buy, they sell. Last financial year, they reported they sold $700 million worth of assets, which were at the peak of the cycle. So they monetized that and then deployed that capital and strength of their balance sheet into buying new assets where they believe their opportunity is ahead of them. So on top of that, they deployed almost $250 million into their existing portfolio to make it better, stronger, and refined, and I'm sure they delivered better yields from deploying that capital within their business. And that's a prime example of what a good asset manager or asset management function can do for a business dedicated to hospitality. Taking note of this, I'm going to start, since Kapil represents the brand here and the investment, so I'll start with Kapil. Kapil, you know, there is a various cycles and stages of asset management, starting from identifying land or a hotel for acquisition to building, signing a brand, operating excellence, and then timely disposing. Which stage you feel asset management or asset manager adds the most value, and how?
Yeah. So thank you, Vinay. So for us, as you just said, I mean, Shangri we're in a bit of a unique position because we own 80% of our hotels in some shape or form, mostly majority owned within the group. And from our company perspective, the investment manager, the person who directs a lot of development effort, and the person who does the asset management is the same. So I think it starts from there in terms of the discipline, in terms of the investment decisions, and asset management go hand in hand. So whether it's underwriting, whether it's product development, all of those aspects are done by the team of investment managers that we have within the group. So the first and foremost is the conviction about a market. The location, what kind of project or product do you want to build, whether it's a hotel, whether it's a mixed-use development. Thankfully, we don't have an issue with choosing the brand, so I think we have very few brands, so it's within the family. So mostly it's one of our 4 brands. And then, of course, working very closely with the designers, the development team, to make sure that we can do the project timelines. Building the right team, aligning on the direction. I think that's the most critical part, is from the underwriting stage in terms of what our investment returns are expected to be, and then how do we make sure that the hotel team buys into it.
You feel you have the same challenges that we have. The operating team doesn't buy into what you believe in?
Oh, absolutely. I think it happens all the time, and we're seeing how within the company we can help institutionalize that. I think a good example was we opened a Kerry hotel in Hong Kong about 2 years ago, and I mean, for those of you who are familiar with Hong Kong, I mean, Kerry Hotel is located in Hung Hom, which is an upcoming area. It's still very busy, but upcoming compared to, let's say, Ireland or Tsim Sha Tsui. So we expected the race to be around Kowloon and about 10%, maybe between 10% lower to at par over time. But the hotel team had a hard time comprehending that. And I think if you look back, I mean, there was, of course, we were able to.
So what made them understand that they were mispricing the hotel?
I think they were too stuck on one aspect of the business, which was location. They just felt, how is it possible that Hung Kong can have similar rates to Kowloon? They couldn't fathom the fact that they had the best event facilities in Hong Kong. They have a brand new product with great facilities. The connectivity to the site, which is so important in Hong Kong, is excellent. From a timing point of view, it's a distance about 5 to 10 minutes. So they were just very singularly focused on that location aspect in their head. And it took some time to get the team around that. They bought into that. We have a great team there. And sure enough, we were able to do that in year one, and the hotel continues to ramp up. So aligning the team in terms of the overall underwriting and the vision or returns that we expect as an investor is extremely important. And then, of course, how do you support them to make sure you deliver those results? Perfect.
So what I understand from Kapil, the challenge remains always with the operating team. PJ, would you have something to add on to what Kapil said? Which part you spend most time in asset management cycle and add most value for your business?
Well, we've been hearing a lot of discussion over the last 2 days, and it somewhere down boils down to that the biggest problem is the operator. So that's what I gather from here, but I don't think so. The problem in the industry is much more. From an asset management, you literally a third-party management. That's the kind of approach I take with my team. I've got 3,500 rooms, 10 to 12 hotels on the thing. But we work as a third-party management, work hand in glove, try to work hand in glove. I do not know the operators will agree to that, but that's the intent and that's the approach I would love to take. Is there conflicts? Yes, there is conflicts, but we need to work around that to make sure but both of us win, the asset wins end of the day.
Interesting. So working closely, almost hand-holding the operator?
Both ways.
Okay.
I mean, that's the only way. I mean, you have decided to get married. Like I think Mr. Joseph was using the word marriage for a long time.
But they were the experts. They should have been leading the way. If we had to hand-hold them.
No, we're not hand-holding them. It depends on how we want to view that and how we want to put it across. You need to work very closely. And an asset manager, you need to carry that amount of depth and knowledge of the industry, right from the revenue side, down to expense, down to CapEx, down to everything. And if you don't have that, and then there's a conflict.
Perfect. No, great. Sanjay, would you like to add to this?
So let me give you a little bit of a perspective about Chalet Hotels. So we believe the 4 pillars that we stand on as a company are firstly getting the right location. And our ability on the real estate side, I think, helps us immensely on that. The second one is the ability to build the right hotel. And I think that we spend a lot of time on the designing of the hotel because you live with that for life, right?
Absolutely.
So you've got to design it right at the beginning itself. The third thing that we work on, the third pillar as such for us, is the relationship with the brands and the brands that we sign up. We've got to get the right brand for the right location to the best fit that we can. And the fourth one, and that's what we're talking about today, is that we are not passive asset owners. We are active asset managers. And we do this through a robust review mechanism that we've set up over the years. We continue to refine it every year. And it's done with a principle that the brand and us are partners in this venture. And we find ways to find, ways to overlap interests, which we can commonly drive and focus on those. So as long as their financial interests and our financial interests align, and wherever the Venn diagram meets, that's the area we focus on more. And I think that's worked very efficiently for us.
Could you cite any specific example where, your analysis or thought leadership, how Kapil was exemplifying the operating team having a hard time valuing the asset that they built and correctly pricing? Would you like to share some specific example in one of your assets or multiple assets where your thought leadership made significant impact in performance change and eventually operator came on board what you initially proposed after resistance or dialogue?
So let me give you two examples I think that have sort of changed the path of our hotel's performances. I did speak about the design part of it early on. So the brand specs that we operate with, sometimes we look at them differently than operators do. If you look at the last two hotels that we developed, which was the Marriott in Whitefield in Bangalore and the JW Marriott Sahar in Mumbai, the hotel has one all-day dining restaurant, one specialty restaurant, and a lobby lounge bar. We haven't had any more specialty restaurants. We strongly believe that after your second restaurant, which is your first specialty restaurant, you're only diluting that same set of guests across various restaurants. And typically, these restaurants sit on prime real estate and operate 4 hours a day, right? Do you want to give prime real estate assets, which are going to give you operating income for 4 hours a day, and continue to have operating costs and fixed costs that are attached to that? No. So what we've done is we've restricted the F&B outlets in our hotels. However, we don't want to, we want to give our guests enough choice. So what we did at Bangalore and what we've done here at Sahar is that we've created multiple F&B outlets. In Bangalore in the form of a mall, and in Sahar in the form of an F&B hub. In Sahar, actually, we'll be opening 30 restaurants there. Now, across price points, across cuisines, across experiences, we've created enough choices for our guests at the hotel to have that availability. But at the same time, we've kept restricted restaurants and F&B outlets in the hotel, and concentrated our guests on those two outlets, which increases our profitability. We've given a lot more area to banqueting, for example. We focus more on the rooms, and therefore our gross built-up area per key at JW Marriott Sahar was 1,100 square feet. If you look at peers in the same market, they're close to about 1,800 to 2,000 square foot a key. Yeah. Now, if I have a 40% advantage on the real estate cost, the denominator on the ROCE is very efficient.
Absolutely.
Right, so that's one. The second one I think that we've worked with, and I must admit, we haven't had a resistance from Marriott on that one. They've actually worked with us on creating a model that works with that format. The second one that we've worked very hard in the last, I think, few years, and I think we've had a fair amount of success, is looking at improving productivity in the hotels. The people productivity, that's the largest operating cost in our business. So we focus on people productivity through innovation and design, through using technology and improving processes, and training and development of the people to get to people to room ratios, which are today probably the most efficient in the country for the category of hotels that we operate in, but we're still long way off from Western standards. So today our portfolio operates at 1.2 employees to a room, whereas the rest of the country is operating at 2 employees to a room. That's again a 40% advantage, the numerator of the ROCE now, yes, for the biggest cost in the business. So all this flows through to deliver industry-leading return on capital employed for us. I think these are two examples that I wanted to share. We worked with other cost centers and other revenue streams also.
Fantastic.
But that'll take the whole of the afternoon, so we'll skip that.
Very interesting. Vineet?
Yeah, I think we follow a similar journey when it comes to building our hotels. And for us, in fact, all our 6 operating hotels today and another 6 which are under construction, they're all greenfields. So in fact, our journey begins from the time that we identify the land for a hotel. We actually try and identify an operator at the same time, so that we travel together from ground up, literally, so that we are able to design the hotel based on what an operator wants. And as far as the operators are concerned, as we were discussing at the back of house, we are absolutely brand agnostic. We believe in horses for the courses. So whoever suits best for that particular land parcel, and we look at the catchment around, which are the other hotels existing, what can be the potential competition, and then we approach these operators, and whoever suits best, we select. And then from the design phase itself, we travel with them. At every stage of our designing, a copy goes to the technical team of the operator concerned. We get a validation from them, and then take it forward. So therefore, what happens is, in a way, later on, the operator cannot complain that you did not meet my brand standards, and therefore I'm not performing well.
So
that's the way it works.
I have a follow-on question for you. Since you work with, brand agnostic, and you have 3 different partners between Marriott, Intercon, and Accor. Which one has given you the best return on your capital deployment?
That's not a fair question.
And how do you, cross-pollinate some of those good learnings across to the other 2?
Let me, Vinay, counter this loaded question by saying, if you had 3 brothers and you were asked the same question, and which brother is better, very difficult. And I must tell you one thing, that every operator, we have 3 partners as of today, and all these 3 partners have brought in certain values which are specific to them, which are special to them, and it's been a great learning for us as owners as well. And there's a lot of cross-learning. So what happens is, as far as we are concerned, we are dealing with 3 operators, and each operator has its own strengths and weaknesses. We are able to identify and maybe sort of add value to the other hotels. So in a way, it's a win-win for us.
So share with the audience who would be interested to know, and who have yet not signed one of these partners, what is the strength each one of them bring, and how do you...
No, that is something I'm not able to publicly announce, but yes, each one of them have a whole lot of values. There are some operators who think like owners, because they probably own assets themselves. There are certain operators which are a notch more professional in their approach, a lot more systematic, a lot more robust system. So every operator has its own pluses.
So, we are very similar, and let me speak from my perspective and my view. When I look at Accor, I say great cost managers. When I look at Marriott, fantastic people, process managers. But Marriott, to the extent, very regimented, a lot less flexible. Accor, a lot more flexible, whereas the sales part is not as strong as Marriott. Both, in the end, we as an asset manager, and I'm helping you and probing you because I'm sharing my viewpoints with you. Is there some qualities or lack of qualities where you feel certain operators can learn and customize to Indian context to better serve the owner interest? Any one of you want to pick that question?
Maybe I'd like to add to that, your question on that. See, the situation has changed tremendously in India over the last 5 to 7 to 8 years. I do agree with you that earlier some of these brands, they were not really familiar with the Indian requirements, and probably they were just trying to push in their own brand standards. But today, in my experience, at least with the working with the 3 operators, I think they've turned very flexible today. They are also understanding. See, as long as it also depends on the relationship that you build with an operator. Yeah. If you just try to push your way through in everything, obviously there'll be retaliation. But if you try and put in logic across for certain things that work in India, and we succeed every time. Like we actually send out a note if there's a certain tweaking required to a particular design in India in one of our hotels. We do. I'll give you a specific example without naming the operator in one of our upcoming hotels, which actually sits in a belt where I'm expecting a lot of Japanese clientele. Now, as far as the brand standards of that particular brand are concerned, they do not allow for a bathtub in the hotel. Whereas, you know it for a fact that a Japanese client will not check into a hotel unless he has a bathtub available to him, because that's like sacrosanct for them. So we put this requirement across with this particular brand with the logic behind it, and it was immediately accepted. So fantastic. I think the situation has changed today. I think almost every operator is now sensitive to the requirements of Indian subcontinent, and they're also, take the classic case of a health faucet in a bathroom.
Yeah.
It wasn't there in any of the American brands earlier, till 5 years ago. And in some of our hotels, we had to actually retrofit it now because the operator themselves decided that, yes, it is required.
Fantastic. So it's a combined approach, you say. So look, taking discussion forward, and Sanjay, you took Chalet public recently, and from asset management perspective, typically, what we say from timeline, operator typically have a 12-month view once you've signed and operated, and they look at business plan and 12 months. Asset manager typically would have 3 to 5 years view on an asset to understand the market, and if they want to do timely disposing of asset, if at all they do that, or add more capex to the asset. Now, after going public, has things changed for you? Are you checking stock price on a daily instead of occupancies nowadays, dashboard? No, jokes apart, on more serious note, with quarterly public reporting, now operator was looking 12 months, and you all of a sudden as an asset manager of these large group of hotels have to look quarterly reporting. How you have to tweak your time from 3-year horizon to quarterly reporting and this annual plan? Would you share with the audience some insights?
I don't think that much has changed. I think what has happened is we were bringing in discipline into the system well before we went public. So I think we were prepping ourselves up for this eventuality. What's changed is we had a family of promoters, shareholders. We now have about 5,000 shareholders. So that's probably the change that's happened since then. I think we realized that we need to be a lot more conscious of what the shareholder expectations in the outside world are. We've tweaked the way we look at debt equity ratios. We are closely watching returns. We've been very fortunate over the last few years to have very good operating matrices in our business. We need to make sure that we continue to build on them and thereby give adequate shareholder return. I think the focus here is going to be a lot more on shareholder returns for sure. I think the other thing that comes on board is that with a very healthy mix of domestic and international investment houses or funds who invested in the business, we do get to engage more often with them, and that gives us a different perspective. And that sort of throws up some ideas which we sort of explore, and we've been working on it for the last year as we did our roadshows. More importantly, I think what we need to focus on is continue to deliver high EBITDA returns on the operating assets. The second strategy is the growth strategy, which is developing the greenfield pipeline. We've got 3 hotels under development. We've got about 1 million square foot of office space under development. The other part of growth is going to come through acquisitions. So we're focusing and looking at quite a few assets now for acquisitions. We do want to try and in some way increase the portfolio maybe 2 times over in the next few years. So operating efficiencies, greenfield pipeline development as efficiently as we've done in the past, some acquisition opportunities which are value accretive, and of course prudent use of capital.
Fantastic. So unlike Vineet, who has for Brigade multiple operating partners, PJ, you have and Saraf Hotels have stuck to one single partner, Hyatt Hotels, for all your assets. And also you have, any particular reason you see to, and how this strategy has worked for you working with single partner? Would you miss out on synergies, learning from other operators, or is it just gives you a lot more focused approach?
Well, from a relationship standpoint, yes, it's a much more focused approach. Okay, we got a deeper relationship with the brand, and as I told you in the beginning, it's more like a third-party management. We work very, very closely to make sure that our operating numbers, be it the top line or the bottom line, is well heard, well analyzed, and accepted to move forward. And when and where interventions are required, the relationship is so strong, it is immediate.
You never evaluated having other operators for any of your assets, or?
You seem to be asking too many loaded questions today, but nevertheless, all right? The relationship has been long and strong and deep, okay? At this point in time, we do not have anything under development. That doesn't mean that we will not, but the relationship is working, and why should we look at it?
Okay, fantastic. So Could you, PJ, share with the audience some of the interventions or thought leadership you have managed to provide the operating brand to change and progress them as a better performing for your relevant assets? Or anyone can take this question. It's, the idea is to share with the audience some of the insights we as a...
Yeah, I'll take that before the rest of the panelists. What immediately comes to my mind is one of the assets within our portfolio. It's pretty inefficient in the operating side, not on the revenue side. And we need to do a deep dive jointly and go back to the investors and say, listen, this is the kind of ROI. And I'm not exaggerating. The ROI was something like 5 to 6% of the bottom line. And it was sitting right there in the asset.
Yeah.
All right, so we worked very closely, ticked all the T's, dotted all the I's, got back and had to have a hard bargain to get them to invest immediately to turn around. So that showed up the bottom lines completely, but 5 to 6%.
So that was additional capital that helps you?
And the ROI was 12 to 14 months.
Fantastic. So you're saying sometime it's when the asset is struggling, putting more capital behind it helps restore, and that's what operator is also looking for sometime as a confidence from the asset manager.
Absolutely, that's what I'm trying to say. So we need to work very closely with the operator and with the investors and play a neutral role to make sure end of the day the asset wins.
Fantastic. You and Sanjay both were sharing earlier, you have physical presence of asset managers at all of your hotels. You want to share how you, is it not too micromanagement, or how do you get the value of placing? Vineet, do you also have one asset manager at all of your hotels?
No, not really. We don't. We don't have individual asset managers sitting at each property. But we have a little different approach, or maybe after Sanjay gives his response. So,
I'm sorry, I'm going to stand up because this chair is a little rocky, and the last thing I want is after an IPO to be on a chair which is not going to be mine for a while. So yeah, look, yes, we do have people at each of our hotels. I think it works two ways. Number one, it facilitates the hotels. They have someone to go to, the person to go to on a day-to-day basis for issues that they need. We sit in Bombay. Our hotels are in Bombay, Hyderabad, and Bangalore today. So it's helpful to do that. This person also takes care of all the invoicing and billing that needs to be done, plus the day-to-day stuff on licensing and licenses, etc. So that helps. Typically, it's a team of 1 or 2 people at each hotel. On the asset management side, we are developing capabilities further. We've always had a team that looked after asset management. In fact, Rajneesh, who's sitting here, has joined us as Vice President of Operations and Asset Management in our team recently to sort of strengthen that process. It helps. I think we are a little more agile to look requirements at the hotel level. I do want to come in though on one thing over here that you asked PJ earlier, in terms of where do you see opportunities for improvement with the brands themselves. And we found, and I was listening to some of the conversations at the owners set of conference that we had yesterday morning. And I realized that a lot of the owners have this thought process that let's say brands are not going to listen to you, right? If you engage at the right level with logical reasoning for what you want to do, they are as aligned as everyone else. At the end of the day, we've got to remember that all of them on a management contract are aligned to your GOPs, and the incentive fees tied up to that. So if there is an alignment of financial benefit, they will always listen to that. I think I gave an example of the food and beverage mix that you need to have ideally in our hotels. Brands realize they're not the best turnaround people for restaurants. I mean, today Azura or someone else can turn around a restaurant concept in 30 days and have a new concept up and playing over there. They're very agile on their feet. They do this on a day-to-day basis. So we'd rather give it on rent, right? And it made sense to the brands because they said, listen, I can cut down my money requirement. I'm cutting down my fixed costs on HLP, on people. They couldn't question the logic of it. And if they can't question the logic of it, they will listen and do what we want, what's right for the business. I think we've been very happy with the engagement. Our relationships in the past have been with Marriott and Starwood. Our eggs in one basket as we speak now, but as we expand the portfolio, We signed up a Hyatt in Airoli, Hyatt Regency actually, and we'll continue to grow the brand portfolio. And you did ask this question earlier, if there is any cross-pollination of ideas across brands. Absolutely. When we had Starwood and Marriott as our partners in various hotels, we extensively leveraged the best practices at each of those hotels and deployed them across the portfolio.
I think that's where they merged, probably.
Oh, well, that could be one reason.
Yeah, fantastic. No, and you were sharing with me in a green room why you moved to Hyatt. You want to elaborate for the benefit of audience?
No, we didn't move to Hyatt or anything like that.
Or added Hyatt into your portfolio?
So, when, as I said, we always had two brands, right? Eggs in one basket. See, we don't look at whether. And we had great relationship with Marriott. We've had great relationship with Starwood. We continue to have Marriott as a very preferred partners. Each hotel, each location will define what which brand will do it justice. So we kept all of that in mind. This Airoli hotel is going to be a franchise hotel.
And you talked about something about loyalty programs, Sanjay.
Yeah, so I'm coming to that. So what you want to do is every city has a certain concentration of each operator's brands, right? At some point of time, the loyalty programs get diluted across various hotels in that city. And you want to make sure that the loyalty program remains relevant and workable for your asset. So at that point of time, you decide in that particular micro market or city, do you need another brand and another loyalty program to work for you for that hotel? So you have concentrated flow of guests into that hotel.
It also ensures Marriott to keep working on their loyalty program so that we don't start looking outward. So Kapil, coming to you, you have little choice in changing the brand, right? So when you buy or acquire assets, you're unfortunately stuck with Shangri-La, or that is the choice you have. How do you think that element dilutes potential of the assets you buy sometime, you feel, or it's not the case, and how Shangri-La can be the best at all times? Sanjay just said, horses for courses, and Sanjay said, different markets, different operator strengths. Do you find that area a little compromised for you?
Not really. We're also looking at expanding some of our brands. For example, we're going to be rebuilding the Traders brand in a big way. So there's a lot of research and development that's happening in that area. So we want to invest in that brand and grow that through investment as well. So not really. Essentially, the Shangri-La brand with its different brands are extremely successful. We are not a very large hospitality company. We don't aspire to be. We're just about 100 hotels. We still mostly work through investments, and therefore it's important for us to also grow our brands. And we've also built a lot of expertise on development, operations, sales and marketing, etc. So not really in terms of having any issues with that.
Any best practices that you could share that you follow within your system? How many of the Shangri-Las you own yourself out of 100?
80 out of 100.
80. So largely you are a capital, it's your own capital at play. So you would have a very robust asset management.
Yes.
You want to share some of the best practices that gets the operating team to deliver better results for you?
I think, like I mentioned earlier, the key aspect of it is the product development stage. And really, how do you tie in the product development, the investment decision, and asset management and operations together? How do you bring that together? And therefore, like I mentioned earlier, the asset manager in Shangri-La underwrites the project, drives the development, and then asset manages it. So alignment with operations, which typically is not so much of an issue with us. Of course, it's more making sure they understand where the investment decision and expected returns are coming from. Setting the direction for them, and direction not only for a year, but direction for 1 to 3 years. Maybe in a bit more detail for first year, and high-level direction for next 3 years. And then making sure you empower them to execute in terms of whatever strategies they have. At the end of the day, they're the best in running the operations, etc. If we see any issues, of course, then you get into the detail in terms of deep dive into the business, We don't leave it to the hotels to do the analysis if we see any issues. We have a team of data scientists. We have strong technology platforms. We invested in a technology data center of about 40 people in Beijing who are developing a lot of proprietary tools, etc., to help us more efficiently manage the hotels. So it's a lot of setting the direction, empowering the team, and if we see any issues, then through various tools and technology systems that we have, an asset manager should be able to drill deep into the business and really identify issues which needs to be resolved.
Excellent. So we are pretty much last 10 minutes into our panel discussion. I would open the forum to audience if they want to ask questions to this discerning panel. And please go ahead. Anybody can answer.
Yeah, stand up.
Yeah. Sir?
Good afternoon. I'm sorry. So my only question is that, when you are looking for an operator, as Vineet mentioned, that he's going to build a hotel with an operator. So are you calculating your EBITDA and ROC margins, and what is the payback period that you're looking at before you make that investment decision?
So that question is for Vineet?
Or even to you.
No, let Vineet answer that,
Okay.
since you mentioned it.
No, generally what we do is that whenever we are signing up an operator, we do insist on a 10-year projection from the operator concerned. And that primarily sort of gives us an indication as to whether the brand is going to perform, that particular hotel is going to perform at that level or not. And that's the way we take a call. We take a considered call. We do an independent feasibility with a third-party consultant when required. So with a combination of these facts, we take a call.
So look, I think we've been developing hotels in the group for maybe about 40 odd years, within Chalet for the last 20 years. Lately, what we've been doing is we've been actually deciding locations on our own, deciding the category of hotel that we want to build on our own. And then we go to the brands and say, listen, this is a hotel, this is a product, what brand can you give us? And what's your outlook on this location like? So we built the last few hotels on that basis. The next 3 are being built on similar basis. So that's how we follow it. Now, we also have a portfolio of hotels which have been around for some time. They deliver us mid to high return on capital employed, high teens. And we are, so therefore all our investment decisions to a certain extent are limited by ensuring that if we go and invest in something else, we need to be able to deliver similar ROCs. So that's our benchmark here.
Thank you. That was very, very useful. And I've learned from you guys, as I'm sure many of us in the room have, the discipline that the institutional asset manager that you guys bring to the table. I think individual owners like us have a lot to learn from, using the right logic, the flexibility of the relationship with the brand. But what I was hoping to hear more from was about the use of data. Not so much in operations, but much more if there are case studies that each of you could share with us as to how, what is the data analytics and intelligence, and realizing that as an industry, we're about 35 years behind the aviation industry in using data and analytics to increase revenue. A single dollar increase that you get for that very same room with the same fixed cost, with the same fixed and incremental cost, wouldn't be diluted and would go straight down to your bottom line. So is there anything you can share, teach us when it comes to using data and analytics today in terms of increasing the yield, the revenue on our rooms? Thank you.
Shall we let the brand guys answer this? You want to take this, Kapil?
I just wanted to say that the brand guys should answer this.
I mean, I can talk a little bit about that. So I think a few examples, specific examples, for example, that we are working a lot with today is really trying to understand the true profitability of each of the revenue streams that we have in a hotel. I think Sanjeev touched a little bit earlier upon the food and beverage, which is a very valid point. Food and beverage, for example, is the profitability of food and beverage is most misrepresented in the industry. I mean, we look at the department profit of 30%, and we say, wow, this is great. Forget about trying to make returns from it. So really understanding the exact EBITDA returns at the EBITDA level from each and every single revenue stream is extremely critical for us. And a lot of that information, analytics, and data actually goes into the programming of a hotel. So I think food and beverage, for example, understanding space utilization, profit per square meter, for example, each and every revenue stream of the hotel is becoming extremely critical for us. So that's one area. I think on the room side, generally it's a lot of basics, for example. If we review hotels for it, so Shangri has also institutionalized asset management actually in the last 3 to 4 years. And basics such as like room mix in terms of how the hotels are pricing their various room types, in terms of how the sales resources are built up. So I think there are a lot of components. I think from a cost structure point of view, like Sanjay mentioned, I think the chains and asset managers overall with various benchmarking and processes can help improve that cost structures over a period of time. But it's more like how do you drive the top line with the right strategies, and how do you understand the profitability of each and every single revenue stream of the hotel, going to the level of per square meter, this restaurant produces how much, the spa per square meter produces how much, et cetera, et cetera.
Dr. Brigade, just a quick point that you raised about data analytics for your consumers and guests. That was a question that you raised also. Look, we sign up global brands or established brands to run our hotels. We don't want to step on their toes on a day-to-day basis. Our level of diligence comes in the capability of the brand well before we sign them up. And then we leave this to them to run. So as owners, I think the trust that we need to display on the ability of the brand after we sign them up is extremely important. Because the moment you don't have that trust, you've lost your investment actually. So that trust is important. Not to step on their shoes on a day-to-day basis is extremely important. But at the same time, you've got to have a robust review mechanism to make sure that they're on their toes.
Joseph,
if I may just add to what Sanjay said right now. We approach asset management in a very, very simple, it's a five-pronged kind of monitoring system that we have. We approach an operator with the assumption that he is the specialist in the job, we are not. And once the annual business plan is finalized, which takes a while to finalize, it takes a back and forth sometimes, and once we finalize the business plan, then we just keep an eye out on 5 aspects of our asset management. First, obviously, being the top line. The second being the bottom line. Third, of course, is the attrition, because that's becoming a crucial thing today. There's a high amount of attrition now in the hotel industry. We keep an eye out. If we are losing good people, then we raise our eyes and question the general manager. And the fourth and the most important point is the managing the local environment. Now, an international operator may not be comfortable or capable of managing the local environment. And that is where our expertise as owners comes in. So that's how we do it. We just monitor these on a monthly basis. We also have a very strong internal audit in place. So we have our internal auditors who visit the hotel at random, do some diptych tests, take a data dump, and then give us a report. And of course, every quarter we also, because we are a listed entity ourselves, and we have a quarterly board meeting, and when the results are put up. So I think as long as you do this hands-off policy, meet them once a month, and let them come to you if they need your help. I think that's the best way to perform.
Yeah. Joseph, to add to your question, data has started to play a lot more stronger role. The annual report I was referring to and some data points from earlier in the discussion, actually they have taken the forefront lead in data analytics. They have 100 hotels. They collect over 10 million data points annually and started to make decisions based on that. Indian asset management is evolving into it. All of us have dozens of hotels at this moment in time, and all of us have started collecting data points.
Adding to that, if I may say, from the revenue, from all revenue stream, there are operating profitability ratios, which is industry benchmark. By and large, we need, if it's the tolerance level, beyond the tolerance level, if it's beyond the deviation is too high, that's where we can step in. Like, if you don't allow that freedom for the operator to work and just analyze what we should be getting and what we had approved, I think pretty much covers the revenue side. And expenses are pretty much controlled. We know what it is. Again, the same ratios will apply there as well.
We don't want to micromanage, but at the same time, sometimes we do step in and say, give some small inputs. For example, I would tell this hotel to turn the temperature up a couple of degrees.
Yes.
It's freezing in here.
Yeah. And that's as obvious as it can be.
The second biggest killer in terms of profitability, HLP.
All right, so we are out of time. Thank you for being such a wonderful audience, and thank you to the panel
Thank you.
for sharing their insights into wonderful world of asset management. Thank you.